Hello traders and welcome to another video review. Today is Wednesday, April 20th, 2022. Let's start as usual with the Forex calendar review. The overnight session were mostly eventless. However, we have a good bunch of data from the beginning of the London session. The key data from the Germany in form of the IFO business climate, current assessment and expectations will be mostly tradable together with the PPI index. All of this data are scheduled for release at 10 o'clock. We got more data from the European Union as well. Industrial production and the current account are scheduled for release at 11 a.m. During the New York session, we got data from Canada and from the US. Consumer price index and all of the sub indices from the Canada are scheduled for release at 2:30, and the consumer price index is expected to decrease from 1% to 0.9%. So very interesting expectations. We have a bunch of sub indices here, and from the US we got the housing markets data, existing home sales, and we got of course the crude oil inventories. They should the crude oil inventories should decrease from 9,382 to 3 million barrels. So this is the New York session. We got some speeches from as well, Charles Evans and Beige book at 8 o'clock, but they will not likely be market movers. Key event of today, I think this is a consumer price index from Canada. So it looks like we are going to take a look at some Canadian pairs today, but let's start with the US dollar and then we go straight to the euro. US dollar daily time frame chart is showing us the continuing uptrend. Just recently we hit the technical resistance at 189. There is even a slightly higher high here, 101.01. So it's like a 12 pips higher. However, the main focus on the situation must be shift to the potential pullback. A recent pullback, as you can see here, on the US dollar had been made in March, and in time and price it took 1.71 percent. This is, as far as I can see, the biggest, the longest, maybe not the biggest, but the longest correction. There was 2.38 as far as I can see, and in this year, of course, yeah, this 2022, 2.38, 1.71, and that's it. Two big corrections. Maybe after this recent rally here above 99.38, we are basically expecting some sort of the pullback, maybe some kind of a bigger correction, not of course bigger than 1.71%, because the RSI is showing us that the market is right now first thing diverging from the price. Okay, so the price diverges from the momentum, and the market is at the extremely overbought conditions right now. So this is the situation we are talking about. So very interesting to see what will happen here. The next technical support is 99.38, of course. Let's take a look at the US dollar to the Canadian dollar again. What happened here? Just to make a quick introduction, we are following ABC corrective pattern scenario on the US dollar to the Canadian dollar daily time frame chart, and so far we are still waiting for the breakout to the downside. Okay, so that's still possible. Not much is going on here on the US dollar to the Canadian dollar, because the market has been as you can see, consolidating here. However, the red candle for today, daily candle, so the daily didn't day hasn't been finished yet, so we need to wait for the daily candle to close. However, this looks like a wave C continuation to the downside, so we should continue to keep an eye on this pattern. On the US dollar to the Canadian dollar, not much happened here. Let's take a look at the euro dollar daily time frame chart. Euro dollar daily time frame chart is showing us still some sort of the weakness, because as you can see, just recently we made a new lower swing low, lower low. We got the low at 1.07, let me just take a look, 1.0758. So that was the low, and of course now this low will act as a support for the market. However, we are trading very, very close to the lower channel line. We are trading very, very close to the recent low. This low will be, of course, the weekly low, right? This is the last week low. So if we break it, there will be another lower low made, and this is definition of the downtrend, of course. So lower part of the descending channel, right? This is the lower part of the descending channel. So we should still be aware of the fact that the market is continuing the downtrend, and there is basically no indication that this downtrend should terminate or resume, or reverse, of course. In order for the market to reverse, ideally we should take out the 1.1185 high. As you can see here, there's a bearish engulfing pattern here. So if the market should reverse and terminate first and then reverse, we should take out this high and fly, of course, higher, way higher. Momentum is still negative. Momentum is still very, very low. So this only supports the current outlook. The nearest technical resistance is, of course, 1.0809, which is now being broken or tested, but there are more here, 1.0947 and 1.1002. Those two technical resistances must be violated in order to let the market fly higher. Let's take a look at the S&P 500, because we got the beginning of the earnings period, and it's very interesting to take a look, because as you can see, our scenario, our impulsive scenario 1, 2, 3, 4, 5 had been invalidated because wave 4 overlapped the highs of the wave 1. So this is now invalidated, and we can put the ABC pattern to the chart, as you can see here. Let me just change the color and change the degree to something more familiar. There you go. This is the situation here. ABC to the downside, corrective. ABC to the upside, corrective. So what it means, basically, what it exactly means, it means that we are moving inside of the bigger corrective pattern. If this is 3 waves to the downside, ABC, if this is 3 waves to the upside, ABC, maybe now we should continue to the downside again in order to complete the 5-wave decline. And then this correction will be 3, 3, 5, maybe, for example, a running flat, or maybe some sort of the extended flat correction. The targets should be at the bottom of the wave C around 4,109, or even lower at 4,020. So if this pattern is the simple correction, we should see right now wave 1, wave 2, wave 3, wave 4, wave 5 to the downside. in progress. Basically, let me just put the wave here. I will show you the wave and change the outlook. There you go. This is the current pattern for the S&P 500 index. If the high of this wave C, which is at 4,338, is violated, then this, of course, this structure, this impulsive structure to the downside is invalidated. The other situation here on the S&P 500 that we can evolve into is, of course, the correction made only with the ABC patterns. And most likely this is some kind of a complex correction, which means it will be as well time consuming, or this is a triangle correction, and the triangle correction will be the correction that is made in order to complete the last push to the upside, right? So right now the upside is still included in our scenario. However, first we need to complete the corrective pattern, and the first correction we of course will be exploring is the simple correction plane ABC to the downside. So we got the wave A done, wave B is done. Now we wait for the wave C. Big correction, nice big correction. Just take a look at this. Nice big correction in time and price. If this is completed, we are ready to go higher. Okay, so that's the situation on the S&P 500. We are now following nothing, not that much change as most people would like to. However, it's still looking kind of a corrective. So please prepare to the situation where we will just simply go lower in impulsive fashion, in impulsive manner. So that might be quick and very, very sudden. Okay, so last but not least, let's of course take a look at Bitcoin. What is Bitcoin doing? Well, Bitcoin is not doing much. Okay, so that's my first conclusion. We made this hammer pattern. We have the confirmation. Right now we should head towards 42,616 in order to test this level, and then 44,409 and 45,811. This is the supply zone. However, with the recent high at 48,257, this supply zone might be not that strong as it used to be. Please notice the fact that the outlook remains bearish, despite the fact that we have the candle here, the hammer candle, because right now we are below this trend line here, below this short-term trend line, which means that the bears are still in charge of the market. Momentum is falling down. Recently we got some kind of a breakout here above the short-term trend line on the RSI. However, we are still below the level of 50, below the neutral level, and the market is under the control of bears still. We need a breakout above the level of 50, which means we will break most likely towards 44,409, and then we will see, because this zone is very, very important for the current, for the future market move, and of course for the current situation, because everyone sees that there is a supply zone. This was a false breakout, unfortunately, and then deep retracement. So maybe we will not have the second chance to break above this zone again in the future. Correction 20%. I think it is completed, so we can put this correction here. There you go, the low of the correction is here, and we are waiting for the future development on the Bitcoin. It's clear that the volatility is lower. Okay, it's lower than it used to be, maybe because the recent developings on the Bitcoin are not in line with the expectations of the majority of the traders, because they want Bitcoin basically to rise, to rally higher. However, this is clearly a corrective movement. This here is corrective, it's not impulsive, and the market will not rise, will not start the new trend, or will not resume the old trend, the old uptrend, of course, in the when it's moving like a corrective cycle. So Maybe we are waiting to extend the correction in time and price, make it more complex, unfortunately, and then after this correction is done, then the uptrend might be resumed. So that's my point of view for the Forex market and cryptocurrency market for Wednesday. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.